most pertinent for today's discussion is the fact that the views and opinions expressed by me are solely mine. They're not indicative or representative of those held by Tickmill UK or Tickmill Europe Limited. For those of you who are here for the first time, a brief introduction to myself. After I graduated from university, I joined a City PLC consulting firm, left with some colleagues and went on to successfully co-found and exit a consulting startup focused on C-suite executive search for technology businesses. Essentially, I had a front row seat to the dot-com bubble, witnessing people make and lose a fortune in the market, sometimes quite literally overnight. So I decided to explore my curiosity for markets with some capital to play with and some time on my hands. I started day trading the S&P 500, or probably more appropriately at that stage, day gambling. And so after I racked up some pretty solid gains, however, as is often the case, my beginner's luck ran out, and I essentially began to average down into losing positions, giving back all my gains and ultimately taking a six-figure hit to my personal capital. To say this was a gut-wrenching and sobering experience is an understatement. I really had to stand back and figure out if it was feasible for me to make a living from the markets. So I decided to get serious about trading and sought out a mentor with an excellent trading track record. Working with my mentor for a period of 18 months was a time during which I upped not just my technical game in terms of researching, developing extensively back and forward testing strategies that crucially suited my personality, all of which are underpinned by a rigorous risk management approach. But most importantly, during this period of mentorship, I significantly developed my mental game. And probably most importantly of all, I made the watershed shift from being a highly goal-oriented individual focused on financial gains to becoming purely process-oriented. So what does that mean? Well, it means I had to stop focusing on what I could make from the markets and start focusing solely on managing my mindset to allow me to consistently execute my trading strategy, oftentimes in the face of negative feedback from the markets in the form of losing trades. But once you become process orientated and you have a professional trading mindset and you understand the true nature of trading being a numbers game, in which you're simply playing the probabilities, you lose the emotional investment and that hellish emotional roller coaster of living and dying by the outcomes of individual trades. So I'm no longer concerned with the outcome of individual trades or even a small string of trades. My focus is on the next 100 trades because I know if I focus on excellence and execution, my edge will demonstrate itself over an extended series of outcomes. My multi-strategy approach has delivered profitable annual returns since 2008. Since 2013, I've also been managing investor capital through a managed account service, again delivering annual positive returns. Since 2010, I've also mentored hundreds of private traders of all experience levels, from complete novices to former CME floor traders, in developing the technical and mental skills to reap consistent returns from the markets. In addition to my fund management and mentoring, I'm a resident market expert, exclusively providing market and trade analysis to Tickmill clients. I provide an in-depth daily market outlook, breaking down the fundamental and technical drivers for the trading day ahead. I also provide daily technical trade setup videos for trades that I'm tracking in the market as the trading day progresses. These are shared through the Tickmill Trading View account and the Tickmill Market Expert blog. I also run Tickmill's E-mini Strategy Facebook group, where I post a daily trade plan outlining my pre-market thoughts for the New York cash trading session for the S&P 500. I give my bias for the trading day ahead and specific action areas where I'm looking to engage the market. These pre-market plans have delivered close to 6,000 points of profit since we launched the group in April 2021. The second Tickmill strategy group I run is for traders who really want to take their trading to the next level. The Tickmill Futures Telegram group is a real-time environment where on a daily basis I share in-depth insights, analysis, and real-time trades. I also provide live commentary during the opening hour of the New York cash trading session, where traders can essentially see in real time how I dissect the markets and identify asymmetric trading opportunities. These sessions act as a platform, helping traders to develop a professional, consistent approach to navigating the markets, and most importantly, those mental mind games that must be mastered to make it as a profitable market operator. Okay, so that gives you a sense of where it is I'm coming from. Let's jump into the charts. And as always, if you have any questions, just drop them into the chat box and I'll come back at the end of my presentation and answer any questions that are there. Equally, if there's an instrument you would like me to take a look at that I don't cover in my deck here, then you can also drop that into the chat box and I'll give you a view on that at the end of the presentation. So we'll start with the S&P 500. As we talked about last week, we were looking for this test of the weekly trendline resistance, which we traded into or just shy of, and we have seen quite a pronounced reversal at this stage. So I'm viewing this move currently on the 4-hour time frame as impulsive, and I'm tracking now any pullback equal in scope and scale to that initial pullback that we saw here from the swing low into the 40.09 into the 40.86. If we hold the current lows, that would take us back up into the 39.90s. From there, I'll be watching for bearish reversal patterns. We've also got this trend channel resistance in play now, and I'll be looking for another leg to the downside. So into that 39.80s, 39.90s, watch for bearish reversal patterns. I'll be engaging on the short side, targeting move down into the 38.80s as the next downside objective. At this stage, we'd really need to see a close back through this trend channel resistance to suggest this correction is potentially complete, and then we'd be targeting a move back up into the 40.50s as the next upside objective. Moving to the NASDAQ. Similar scenario here, we are looking for any pullback into this trend channel resistance, 11,690s. Watch for bearish reversal patterns, and we're looking for another leg to the downside. I'm looking for a 5=1 setup. So depending upon where we bottom here, if we hold these current lows, any move up into that 11,700 zone, we watch for bearish reversal patterns to engage on the short side. That would give us a move down to test daily and weekly projected range support into the 11,300 area. Similarly, with the S&P, we'd really need to see a close back through this channel to suggest this correction is potentially complete. Moving to the Dow Jones, similar setup here. So I'm looking for any pullback now into the trend channel resistance, 34,000, as bearish reversal patterns in this area to engage on the short side. And using that 5=1 measurement, it's a little bit shorter than that. There we go. So any pullback into that trend channel resistance at 34,000, we watch for bearish reversal patterns to engage on the short side. Our target to the downside becomes 33,200. Moving to the DAX, tracking a corrective move here in the DAX. I was looking last week for another leg higher, looking for us ultimately to hold this trend channel resistance. We didn't get any reaction there, sold down. So now what I'm looking for is a 3-wave correction to develop, and ultimately any move back into test the 14,460s. We want to see bearish reversal patterns there to engage on the short side. Just moving to the daily chart here, and I'm going to blow this up so you can, it's a little bit clearer with respect to what I'm talking about. So on the daily time frame here, we can see that we have a pretty clear wave cycle developing here. I'm going to suggest that we currently have a wave 3, an interim wave 3 high in place. And what we're looking for now is a wave 4 pullback. Now, what I use as an initial target for the wave 4 low is an equality objective or a symmetry swing versus our wave 2 corrective leg. So that would actually give us a target here, 13,900, which coincides with these prior highs. So I'm looking for any pullback now in the DAX into 13,900, especially if we get that pullback occurring post the FOMC meeting next week. I watch for bullish reversal patterns here to engage on the long side, looking for that move up into 14,700. The Nikkei, let's move back to the multi-chart view. So the Nikkei also in a corrective phase now. So I'm looking for a quality objective versus the swing structure here. When I talk about equality, what I mean is equal legs in terms of market price movements. So that gives us 26,975. That also coincides here with the trend channel support and the high volume node on the daily chart. So I've been watching for bullish reversal patterns in that area to engage once again on the long side. looking for a move at least back up into retest price cycle highs, 28,519, and then onto trend channel resistance just below 29,000. At this stage, we'll take a loss on a closing basis of that trend channel support. Yes, we have a more meaningful high in place, and then we can think about moving lower once again. But for now, the setup and structure looks constructive to me, and so I'm looking for further upside. Nifty has tested into our support zone, and so what I'm looking for now is any flows back through 18,790. I want to engage on the long side. Minimum upside objective is 5=1, which gives us 19,200. At this stage, again, to suggest a more meaningful high is in place, we need to see a close through the 18,600 area, and that would have us back down testing support to 18,120. Moving to the bond market, TLT on a tear. Last week, we were looking for a 108 test. We gapped through there. And what I'm now looking for with TLT is a wave 3 high to develop just below 111. I'm using the measurement of wave 1, a 3.618 extension, which you will often find caps those wave 3 highs. So I'm looking for that level up just below the 111. Want to obviously see momentum divergence maintained. So price making new high, but our momentum study failing to confirm that. And then that should set up a 3-wave corrective move, something similar in scope and scale to our wave 2 low. For our wave 4 would have us back into 105.60s. From there, I want to watch for bullish reversal patterns to re-engage on the long side. Minimum 5=1 objective takes us up to 112. And then that should complete the first leg of a bigger corrective phase developing in the bond markets. Moving to the Forex space, and we have the dollar index. It's a nice channel trading opportunity here. So I'm looking now for the dollar to any move into this high volume node and trend channel resistance, 106.20s. I'm watching for bearish reversal patterns there to engage on the short side. As we talked about last week, I'm ultimately looking for a test of this 102.70s, which is weekly trend line support and the midpoint of the broader channel that we've been trading in for the dollar index. So any move into here, then I'm looking for a more pronounced corrective move to develop. So we look for 106.20s, 106.30s, bearish reversal patterns there to take us down into our target zone, 102.80s, 102.60 there is the weekly projected range support. And the euro, obviously trading pretty much inverse to the dollar index. So looking for one more push higher here in terms of the euro up into the resistance zone here, 106.30s. Forget that move. I'll be watching for the momentum divergence to be maintained. You see, we'd pretty much have triple divergence there onto that next high. I watch for bearish reversal patterns there to engage on the short side, targeting a move down to test support at 103.60s. And then from there, we'll see if buyers are going to step back in once again. So we're looking for that test of 106.30 to give us a setup, bearish reversal patterns, momentum divergence maintained. So ideally, what I'd be looking for is momentum to do something like this. Hold this area and roll over, and then we get a bearish rejection at that 106.30s and our initial target to the downside, 103.60s. Moving to sterling, holding our trend channel support. So close now back through the 122.30, sets up that move to target 124.80s, 124.90s. And then from there, I'd be looking for a more sustained corrective move to take us back into trend channel support at the 119 here. You can see it more clearly on the daily time frame. But initially, we are looking for this push towards 125. And then similar to the euro and obviously trading the inverse to the dollar index, we're looking for this momentum divergence to be maintained. And as we get into this area, which are bearish reversal patterns to play for another correction to the downside. And like I say, thinking about something back into that daily trend line support, just below 119 will be the target there. Moving to the dollar yen. Looking for this trend channel play here. Look for a test of 138.60s. Bearish reversal patterns from there, and we are looking for another leg to the downside to target just above 132 in terms of the dollar yen. Now this could form a complex, slightly more complex pattern, so we could get a ABC here internally, and then get the push up into our resistance zone, 138.30s. But setup remains the same, looking for rejection here from this trend channel resistance and giving us that downside objective into the 132s. Similarly, if we take out this trend channel support here, then that would be the first clue as to the fact that we're not going to test the primary trend line resistance, and we're likely to roll over and head straight to the target zone at 132. Swissy. A similar scenario to the dollar index here. What I'm looking for is a test now into trend channel resistance at the 95 level. From there, I want to see if a rejection on either the hourly or the 4-hour time frame to engage on the short side. And I'm looking for a test down then into projected trend channel support down to the 90, just above the 92 level. Euro yen. Looking for the euro yen to test up into trend channel resistance here at the just below 145. From there, I'm watching for bearish reversal patterns. Now, we still have an open target here on the downside at 140.20. But what I would also be watching is any pullback into the midpoint of this channel that finds support. So again, we're talking about 4-hour or hourly rejection of this zone. I would actually look to engage on the long side, looking for a retest of our resistance there at 146.04. The Aussie yen, let's see what we got here. So with the Aussie yen, I'm looking now for a test of it's a quality objective versus the swing low here at 91.40s. I'm looking for bearish reversal patterns at 92.60s. To engage on the short side, looking for a test down into trend channel support and the monthly projected range resistance, weekly projected range resistance, 90.30s. And we've also got this weekly trend line support coming in just below the 90 level. That's going to be a key test here for the Aussie yen. And also, if we think about the Aussie yen as a risk proxy, if we hold this level and we can bounce, then that could set up the much hoped for Santa Claus rally in terms of risk sentiment in general. Moving to the Antipodeans, commodity currencies, dollar CAD, getting a rejection here. So I'm looking to see if the dollar CAD can hold support into daily projected range support, 135.60s. If we can, we have an equality objective just below 138 and those prior cycle highs there. So that's going to be the test zone. If we can hold support at 135.60s. If we don't hold support there, I'm looking for move down into trend channel support and the high volume node 134.40s on the downside. The Aussie held trend channel support again. So we are looking now for price to extend to the upside. We have the target here at 60, well, just below the 69 handle. If we can extend, we look for trend channel resistance at 69.20s. We've also got the high volume node there on the weekly time frame. And then once we test into that area, I'd be anticipating we get a more sustained corrective pullback in terms of the Aussie. Something similar in scope and scale to the first. So if we're thinking about this as the wave 2 correction, let me blow this up and draw it in for you so you can see exactly what I'm talking about. So if we clone that, so I'd be looking for this type of corrective move, 3-wave pattern. So you can see us trading back down into the 66.40s for once again trying to advance to the upside. Moving to the Kiwi. Kiwi continues to track nicely to the top side. We're looking now, the next area of resistance in the Kiwi is going to be this 64.70s. If we hold this trend channel resistance, still scope that we do a 3-wave corrective move before advancing into that target zone. But if we trade directly to it, I'd be watching for bearish reversal patterns there off this trend channel resistance for this more sustained corrective move to develop before the next leg to the upside. And I think I mentioned last week the potential for the development here of an inverse head and shoulder scenario. So if we can get up into here, then we'd look for this type of price action to play out, testing into just ahead of that 60 level before looking for our next leg to the upside. Gold. looking for a three-wave corrective move to develop here. If we can hold the current swing high, which would have us back down into the 1744 area. From there, I'll be looking to engage on the long side again. I'm looking ultimately for us to test into 1850 here. And you can see again, my thinking is that we probably, if we retest these highs from current levels, watch for failure there. And I'm looking for a pullback into the 1680s to develop, to put in a potential inverse head and shoulders scenario, which would then have us targeting a move up into the 1880s. I think that's more than likely going to be a trade for the early part of next year. Silver. Similar to the gold setup, we're looking for a test of 25.19, the trend channel resistance. If we can, let me just move this. If we hold here at the 2320s, we look for a pullback into the trend channel support and weekly projected range support coming in now at 2190. From there, watch for bullish reversal patterns to engage on the long side, looking for that move up into trend channel resistance 2530s for silver. Crude oil, a bit of so last week we were looking for a test of 7330s to give us a bounce. We've got a decent bounce. Obviously, then we've had various headlines coming out of OPEC. We've had concerns about the China reopening story and saw a pretty steep sell-off. I'm actually looking for crude to test below the $70 level and get the yearly pivot to test here just above 69. So if we can get that move down into the 69 handle, we know that the US are actively considering buying crude oil into that $60 region to restock the reserves in the US. So you've got a pretty sizable buyer in the market there, and so any reversal from that yearly pivot, I think, could have some real legs, and we could then be thinking about a move back certainly into the 80s as potential range resistance. Currently. So any move into that 69 level, certainly you want to keep an eye, watch for either that 4-hour or daily bullish reversal patterns to engage on the long side. And I think first stop is a move back up into the low 80s there as the range resistance for crude currently. And rounding things out with Bitcoin, I've been watching this most of the week here, looking for this trend channel support to hold at just above 16,700. Any close through the trend channel resistance here, 16,900. I want to be involved on the long side, looking for a move up into 17,820 as the next upside objective for Bitcoin. So that concludes this week's whistle stop tour of the markets that I'm actively tracking. Like I say, a really important week next week for risk appetite and risk sentiment. We've got the CPI data and the final Fed meeting of the year. And once we get those risk events out of the way, maybe we get a shakeout in terms of positioning. Then we'll see if we are going to get a setup for a rally into year end, or something else to be cognizant of. Remember, price action we saw in 2018, that vicious sell-off on Christmas Eve before recovering, something to be cognizant of because of the rate environment and those rate dynamics that we're currently experiencing, which are great, potentially, have a greater impact than that which we saw in 2018. So really, what happened at the back in that sell-off was a clamor for dollar liquidity. We could get a similar setup this year. But if we can get through the FOMC and CPI without any major shocks to the market, then we could glide gently higher into year end. Okay, are there any questions? Gold, I've just done gold, so hopefully you know what I'm looking at for gold now. We're looking for any pullback into the 1740s is an opportunity to buy. Any retest of this 1820 area, as long as we don't make a new high in momentum here, I think we could start to see a bit of a pullback in gold before advancing into next year. Okay, if there are any other questions coming through, I'm going to wrap this session up here. Actually, what I'll do just quickly for those that are here for the first time, I will share with you the link for the Facebook group where you can get my daily trade plan, and I'll also share the Tickmill Trading View account where I share trade ideas on a daily basis. Let me just get that for you. This could be a good place to start for you following these trade ideas I explain in video format, the opportunities that I'm looking at, how I'm shaping the market, the levels that I'm looking to engage in. So that could be a good first port of call for you in terms of getting a sense of how to framework market price action and how to develop trade ideas. Okay, guys, if there aren't any other questions, I'm going to wrap this session up here. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next week, thanks very much.
But if I lay down and I play dead